What it do? Welcome back. We're heading to our second week of this month, right? No, I'm not living in any type of paradox, but yes, we're heading on to the 10th of July. We're still focusing, or I should say, we're still looking to capture a peak formation within the daily time frame box, which represents the monthly price action of last month, even though we want to see a new peak formation develop for this month. Why? So it can enable us to swing trade. Last week I had a selling bias for GU. For the first 3 weeks of last week, my selling bias was correct, but they did a bullish reversal on that Thursday or Friday. So if you guys took any selling positions on a Thursday and Friday, and you lost that and want to blame me, I'm sorry. Again, this is just my mindset. These videos are just, or when we talk about, updates on the current price action or whatever, this is just my analysis, and I'm not trying to give out any type of tips when it comes to trading for you to profit, okay? Because you may not like my style of trading or my entries, and I'll get on that when we get on Bitcoin on the 15-minute chart. But again, so we want to see price do a double top, triple top, or head and shoulders formation. On a daily chart, it may be difficult to identify a head and shoulder formation because it may take a little bit longer. So we're going to see a double top formation such as AUD like this, but we want to see this price action where we want to see this price action at the extremes of last month's high or low. I want to see this double top that's beginning to form for GU happen up here. I like to see this consolidation up here because all this consolidation right here with these wrinkles, with these particular wrinkles, this tells me that this is the beginning of a M formation. Bitcoin, all they did last month, for the last 2 weeks of last month, all they did was consolidate. A lot of talking heads are saying that they want to see this price action break out bullish, but me and you know what the smart money tends to do. They'll use the global trend within their favor. So, yes, you're going to see these false breakouts. That's what these wicks are, false breakouts. So we have 3 or 4 pin rejections up here telling me that this is smart money's resistance, not the global trend resistance. The global trend is expecting them to break out of here and the trend to continue to go bullish. But from ever since last week, when I said with Bitcoin has been on the bearish. On that Thursday, once we go to the weekly chart, we'll see that trap formation, okay, that we want to see when we want to swing trade or look for easy trades at the support and resistance of last week's high or low or last month's high or low, okay? So, just right off the bat, I'm looking at AUD, JPY. AUD, JPY, I like this price action, I like the consolidation, and I like already that we're already having a little break, okay? Same thing for GBP-CHF, but I'm learning, okay? So, not so much to where I know that this consolidation, I want to see that this consolidation at this extreme, such as with GBP-USD. Last week, I deemed this consolidation to be a selling area. Yes, I was right for those beginning 3 days of last week, but why we want to see this consolidation at the extremes? So it doesn't give them enough room to retest and get your stop hunts. You see what I'm talking about? I don't want them to have any type of room or reason to come back up here. Okay? So for for Bitcoin, they were up here last week. This wick wasn't painted up here. It just showed consolidation, and that was that. Okay? So, I'm going to be focused on Bitcoin. I'm going to be focused on AUD-JPY. I'm still going to focus on GU because I'm hoping that this double top over here, or this price action, pans out to be, a M formation. Okay, but those are the pairs I'm going to focus on. And again, like I said, this month is still fresh, so I have to let this market paint that second leg for me. I have to let JPY paint that confirmation for me. Okay, that's that. That's all we're going to be doing on the daily time frame. And the reason why I added the whole numbers and round numbers, because 2 years ago or 3 years ago, when I was very, very profitable, when I was very consistent with the strategy, I was implementing my entries based off if price breaks out or pulls back or does some type of trading around these areas, these red lines, I mean. I will wait for a second brick confirmation, then get in on my trade after the pattern. I wouldn't just randomly, I'm not saying, oh, as soon as price touches here and they paint two bricks over here, I'll just enter. No, that's not how I trade wrinkles. That's how many other people may trade wrinkles. They'll draw the trend line and they'll wait for the two bricks and just get in. No, okay. I'm not that type of retail trader. I'm that type of retail trader is that's following smart money. So if I'm following smart money, I'm waiting for the market to do a couple of things when they touch these areas. I'm waiting for. Let me see if I get a good example. Let me turn this off. Okay. So I'm basically waiting for this. I'm waiting for market to break out, pull back, and retest. That's my second leg. Even though this price action is kind of ugly, but if we look on a lower time frame, this will be a perfect M. This will be a perfect M. It's just that this M is on a bigger scale, and I'm seeing that this market is building or is resisting the ceiling, is resisting resistance. So this is my second leg, and this will be my first brick, and I will count this as my second brick, and I'm entering over here. Yes, it's kind of deep as a stop loss. Well, we're on the daily time frame, but if I see that, I know that there's going to be little to no drawdown, okay? Especially if we're on the 15-minute time frame. So let's head over to our 4-hour time frame and see the weekly traps, okay? So let's start off with our majors. GU, again, for those first 2 to 3 days, GU was painting lovely setups in this area. Sell setups. Monday and Tuesday, they on a Tuesday retest. They retested this high over here, and I didn't trade. I was still in my demo account. Now I'm in a live account. Okay, so I was kind of mad about myself. I was kind of mad at myself because I didn't trade. I didn't trade JPY, especially AUD-JPY. Like, we had some beautiful price action or beautiful setups that was going on the 4-hour time frame on the weekly traps at last week's highs. And I was kind of mad at that, especially with Bitcoin. If we scroll back, we see that Bitcoin did what they were supposed to do. They consolidated, down, okay, whatever, and they trended up. They trended up to last week's high, and they did what I expected them to do: manipulate the highs. Okay, they broke down. This is the first leg, and they went back up. They retested. This is what I mean. Get your 50 pips and dip, okay? And on that Thursday last week, they came up here, those greedy suckers, stopped hunting again, and blessed our game for another 50 pips. Bitcoin is almost like gold, because you're not really making 50 pips. You're making like 100 or 200 pips with these type of movements, because the market is so I won't say volatile. It's so valued, and they have to incorporate. I don't even know. I'm not even going to say anything that I don't know, but I just know that 50 pips, the normal 50 pips that we get on the regular currency pairs can turn to 200 pips in movement. Okay, that's why you really need to be careful. Okay, so I made 58 pips because it doesn't really make sense for me to make 5 pips and make $22 on that. No, I made 58 pips, and that was $22. Okay, but anyway, like I said, we're on our majors, and like I said, we want to see, when we look at last week's price action, we want to see a low volatile box. Why? Because 9 times out of 10, that's going to give us our type 1 setup. Asia range of less than 50 pips applies to the same thing of on the weekly traps. Yes, all we have to do is basically this. How many pips was that? It was about 137 pips. 137 pips. I guess, I don't know, we could say less than 100 pips, whatever, I don't know. But all I know is that this is a type 1 because they violated the last week's high and they went on for the sell. Okay? Same thing with GU. Yes, the overall trend was bullish, but like I said, we're looking for easy setups. We're trying to stay away from EMAs. We're trying to stay away from pivot points, the average daily range. What else? The TDI, the MACD. Okay, we're trying to stay away from all these indicators that's going to hinder us, that's going to cripple our analysis, because 9 times out of 10, that's what you're doing. You're incorporating those tools to form up some type of analysis, and true, you're supposed to trade price action. Okay, when you are able to focus on price action, raw price action, raw patterns, 9 times out of 10, you're going to make the money. Like Steve tells us, the pattern. The rest is just to give you confidence. The rest is just to give you motivation to take the trade. And if you do lose that trade, you know that, okay, the market maker has some type of objective. Like I said, if my stop loss was up here for this, for GU, even though I didn't trade GU, all I would have to do is wait for the market makers to go up another 25 to 50 pips as in a strike zone to come up here, and I would just wait for that M formation. But like I said, I'm looking for clean and easy setups. This right here for AUDCHF, I'm looking at this, okay? On that Monday and Tuesday, especially on Tuesday, I'm looking at this. They put me up here, I know that's an M up there somewhere. Okay, when they come down, they just don't fall like this. That's what these wrinkles do. But on the lower time frames, that's an M. Such as like this. This will be a type 1. GBP DKK. Focus on that, guys. Let's focus on that. That's a beautiful price action right there. So I'm focused on this type 1 for this week. And that's that. Maybe GBPCHF. We see here we have a double top rejection over there. And that's that. You know how simple this is, guys? Come on now. So let's go on our 15-minute time frame, and I'll take you straight to the trade that I took on Bitcoin. So when I came to the market at this paints at 9 a.m., I was over here. It had to be like 10 a.m. And I was telling myself, man, it's about to be, well, if it's 10 a.m. over here, it's 11 a.m. in New York, and I'm pretty sure it's too late. And I was really not going to take this trade, and I took this trade right around here. Okay. So if this was like the red bar right here, this would have been an entry parameter for me. I have experience of taking trades around here, but again, I'm not experiencing that. I'm experienced of waiting for a 2-brick confirmation. Okay, why? Because my pattern is complete. I understand this price action at the appropriate time. Okay, we break the initial high of the day. I have basically a ugly W, V, V, M. That's all I need. I don't need any indicators telling me about how I should enter that trade right there. All right. So initially I was in profit of $58. Okay. Why I didn't take profit, even though that's right along with my trade plan. My first trade I was supposed to make 50 something dollars, but I put my take profit all the way down here to $2,000 because I seen that Bitcoin had a lot room to complete the new cycle pattern. It had a lot of room to come down here. Okay, this is what we're aiming for, guys. When you identify a beginning of a peak formation, or when we do get that peak formation, come back to your daily time frame and set your take profit at the low of the value of last month's high or low. Okay? That's 500 pips right off the bat. So that's why I put my take profit down there, not wanting to capitalize off that $50. So when market did come back against me, which was this wick over here, I was at $22, and around that time, I said, we're at 2 o'clock, it's 3 o'clock in New York, let me just take the money and be on my merry way, because I know next week the way that we're trading, I know next week is going to produce about 3 to 4 trades I can knock off on my trading plan. Yes, 3 to 4 trades a day, okay, that I can knock right off the bat. Technically, this type 3 W right here, you set your take profit to 50 pips. The market produced about 37 pips or 40 pips. Boom. I'm fine with that. Then Steve tells us, come back to New York session and try to get the New York reversal trade. Yes, you can look for the New York reversal trade. GBP, DKK, the New York reversal trade happened a little bit early, but we know that we have intraday levels. So the market makers, they broke this high, sending a consolidated M, very sneaky of them, went on with the trend, with the new trend or reversal. Consolidation level 1, boom. Okay, really supposed to be AAW, but whatever. And that would have netted you $100 and something. It's really 50. I want to say it's 100. It probably is 100 pips because these indices, it's almost like Bitcoin where the pip value is kind of weird. Okay, but again, for my retail traders, you're saying to yourself, well, you just skipped the majors, and the majors did what? I don't know what the majors did. Yes, I know that they went up for that day, but I don't know what kind of patterns are these. My wrinkles are not indicating any type of patterns. Yes, they did a double low or a double retest of the initial low today, and yes, that is a type 2 W buy, but I didn't get a W. I don't know what that is. I know what this is. That's a W. Well, this is the second leg of the W. First leg, second leg. I know what that is. But I don't know what this price action is right here. I don't know what that is. Okay? I know what this is. Oh, I love seeing that. I love seeing this. But when the market does this type of fast price action or this boom, 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 that's too fast for me. 9 times out of 10, I'm too late. And I need that I need to be at the high or low of last week's, last month's, or yesterday. And I need them to consolidate. I need them to paint that first leg. I need them to consolidate or do some type of M like this for me to feel confident, for me to feel motivated, for me to take the trade. I don't want to ever come to these wrinkle charts and feel lost. Well, initially, you're always going to feel lost. But I don't want to ever be taken off guard. Because if I said, well, this is an M right here, and then they stop hunting me out, I wonder why. Because that's not a clear price action. That's not clear price action. That's just a bigger level that's being played out. And I'm not looking for that. And you shouldn't be looking for that. Okay? Don't be looking for no trades like that. That's not going to pay you. That's not going to give you any type of good money. Alright? We're here to make easy money. Right? I'm telling you. With that trade plan and the way that these wrinkle charts are able to decode the price action for you, you're going to be making 3 to 4 trades a week. Well, I should say you have the potential, okay? But you always I guarantee you. That's my guarantee because I did it. I've done it before. With these wrinkle charts, have a trade a week, but nail for it. And then when you nail for it, when you start to get consistent, you're going to be hitting 2 trades a week or 3 trades a week. And before you know it, you're going to be on your 10th trade on your trading plan. And within under 2 months. Okay, it's not going to take you 6 months or a year to place 20 trades. You're going to get multiple trades with these wrinkles, with this strategy, and the way your routine is and how you come to these markets, how you come to these charts now. You're not just glued to your 15-minute chart and hoping that you see a type 1. Now you know about the type 2s. Now you know about the type 3s. Now you know you have a solid routine. Okay, you should be focusing on the daily time frame for the first 2 weeks of the month. Okay, you should have a peak formation to trade away from and only trade in that way. So by the time the third week or the fourth week of this month comes, when you do look for your weekly traps, you're in a good money. Okay, you're not being stopped out because so and so. I don't know what's going on with you, but I had a gentleman contact me through iMessage, and he says that he's funded. He just doesn't know how to count levels. And I told him, I said, listen up. Don't worry about the levels. Why? Because with my method or my routine on how to trade, you're looking for the beginning of a new peak formation. So when you catch the beginning of a new peak formation, the levels are already going to come to you. All you're doing is setting your take profit for 50 pips, and that's that. That idea of, or that mindset of trying to identify the next movement or the next level of the market is kind of putting us, or put me in a mindset that I'm rushing. And when I'm rushing, I'm being sloppy. I'm overlooking my analysis. I'm overlooking my trade process. And when I don't find that trade, I'm going to be desperately taking trades that doesn't resonate to me. And you already know what that translates to. Losing money. So don't worry about the levels so much. Just worry about the pattern. When you worry about the pattern, you're on top of things. You're at the beginning of the motion. Okay? So I don't ever want you to focus on the levels. The levels are going to come. When you find that peak formation on the daily time frame or on the weekly time frame, I should say the 4-hour time frame, level 1, you're going to miss level 1 because it's going to happen so fast. You're going to be in profit so fast to the point where you don't really have to focus on it. You're going to be already focused on a 15-minute time frame. And when you're focusing on a 15-minute time frame, now you're focusing on you're identifying the fresh new peak formation. Okay? That's going to lead to the intraday levels. And then you're going to be worrying about, after that, the reversal, the New York reversal trade. And 9 times out of 10, you're not even going to be worrying about the New York reversal trade because you already made 2 trades. I mean, you already made your 50 pips for that day. So don't hurt yourself. Again, if you have any questions, let me know. You have my contact information. Use that email to iMessage me or just regular email. Hit me up. Stay in your Bibles. Download that app. I forgot what it's called, but it's something. But I'll have the link in the description. Get you a trade plan, a Bible trading plan, and just stick to it. Because 9 times out of 10, like I said, before I met that such and such female, before I self-destructed myself, or I basically let myself throw me off my game. Before her, before I was profitable, I was dealing with a spiritual battle. I was dealing with self-doubt. I was dealing with greed. I was dealing with poverty. I was homeless, and many other things. Okay, it took me a long time to really ask God. Well, not really ask God, but it took a minute for God to give me the tools, the spiritual tools, to open my eyes and see what was really going on, and give me that drive, to give me that hunger to stay with Him and just love Him and stay close to Him and focus on His Word and fast and spiritually grow the right way. Okay, it's one thing to be spiritual, but if you don't have Jesus Christ, if you don't have God backing you on your spiritual journey, you don't have real spiritual progress. You're just practicing witchcraft, basically. I could you not. You're just an empty vessel accepting any type of message or any type of energy from the fourth dimension. Okay? So, go on my drive folder, and look up the in the miscellaneous folder and look up the Marwin's institution. It's some type of institution, but that's going to enable you to activate your third eye, meditate, teach you about your chakras the right way. This program was, or the people that began that program worked for the government, okay? And they came up with their own program to continue on this research and teach people, and I got all their files, okay? So again, if you have any questions, let me know. Thank you for everything. Stay blessed.